Hello, a lot has happened last trading week. And you know what? Tesla price really came down quite a lot. So this week I decided to do a video because there's a lot of things going to be happening in the next week, correct or not? Because of the presidential election. So what is going to happen during the presidential election and after the result is out, what will happen to the stock market? And also, Ant IPO is coming up. Is it a good time to buy? If all these interest you, stay tuned, okay? So this video is sponsored by no one but your motivation and your like. Please give me your love and show me some like so that I'll have some motivation to do more video like that because I know that you guys like it and I will do more, right? Now, last week, what happened to Tesla price? Now, Tesla price came down and dropped by 17% crash. Whoa. So is this going to continue? Now, it would depends on the overall market, right? If you watch my previous week video, I talk about if let's say the price of the Tesla, whether is it going to go up, whether is it going to go down, there's a very high chance it will mirror the overall stock market performance. So the overall stock market performance has been coming down, and it is no surprise that you will see Tesla price is also coming down. So this presidential election has definitely hit the stock market and it has affected the stock market in certain ways. So how will this outcome of the presidential election affect the stock market further? So let's take a look at what is happening. I realize I'm covering Donald Trump's face. So these two, they have got different agenda, right? Now, in every election, there will always be a theme. It's like a marketing campaign, right? Okay. So every campaign, there must be a theme, a promise. So based on the promise, they are looking for that promise to persuade you to take action and favor them, right? Just like a product, like why you should buy the product. So similarly, in an election, they are telling you why you should vote for them, what they can do for you, what's in for you if you vote for them. So if you look at Democrats, right, the Democrats, they are more pro people. They want to bring in more stimulus to the economy, and they believe that giving the money to the economy will probably help the people better. But if you look at the Republican, they are more pro-business, which is the reason why, right? Okay, a lot of people will always believe that the Republican is always better than the stock market. And because of that, right, you can see when the Republican is being elected, okay, so it will always be positive. And then when the Democrats are being elected, okay, they will not be so positive and for the stock market. Okay. However, okay, you need to look at the trend. Okay. Eventually, no matter who wins, right, the market always go back up. Okay, go back up higher. Now, why? So my previous video, I talked about it because, right, the US economy is not championed and not powered by the government spending alone. Okay, I'm not saying that they have no impact, but it's not them alone. Okay, it is largely influenced by the private companies. You know what I'm saying? Because the private companies are the one that really push the economy. Okay, and also a lot of people keep thinking that because Republican is pro-business, so they are better than the stock market. But do you know that the Democrat is based on historical patterns now, okay? The Democrats has better return, right, on your money, okay, for the stock market. You can see that on average, a Democrat president will bring an average annualized return of 9.7% versus the Republican as 6.7%. So Republican, it's always better for the stock market. Therefore, whoever wins, what is going to happen? Probably no matter what, it's still going to be good for the stock market. It's just that maybe in the near term, it is not going to be good for the stock market. And because, right, chances of Biden winning this election is high. And because of that, the market is really pricing in. Okay, because remember, okay, when the Democrats wins the election, so normally the market will dip a bit, right? Because they think that it's not going to be good for the market. And since a lot of people believe that there's a high chance Biden is winning, should you sell now and then after that buy back later? Because the market probably going to dip further, right? Now you will never know, although it's a brilliant idea, okay? Now, here's the thing. On average, in the last 100 years, the stock market has has bring in the return of about 9.4%. Now, do not underestimate 9.4%. It's actually a lot, no? So if you look at 100 years ago, if you were to place $1, that $1, okay, today will become $1,490 100 years later, based on a 9.4% return. That's a lot of money, you know. So do not underestimate the single digit return, huh? Okay. Now, if you look at the last 10 years, yeah, the returns is even more lucrative if you look at it. So the average return, if you invest in the S&P, is about 14.7%, Dow Jones is about 15.03%, Russell 2000 is 13.45%. Okay, so the returns are great. So if this is the average return. So if you're saying, if I were to buy low and sell high, I can make a lot more money. So see, there will always be a dip, right? There will always be a dip. There will always be a dip. If I'm able to buy the dip and I'm able to sell at the top, right? My return is let's forget about the average return of how many percent? 9, 10, 14%. This is 200% return. Oh my goodness. So why don't I do that? Yeah, don't be fooled by averages. Okay. Whatever I'm saying just now, in terms of the average return, it's when you stay invested. Okay, when you stay invested. Some people say, yeah, I don't need to stay invested. I can just spot the top, buy the bottom, and I will have triple digit return instead of a low double digit return. Yeah, okay, fine. Now, if you're looking at timing the market, it requires two very, very difficult, correct decisions. Damn difficult one. The first decision is this: you must spot the top. The second very, very difficult decision is this: you must catch the bottom. So you believe you can always do that? It's already very difficult to spot the top. It's even more difficult to catch the bottom. Okay, so it's very difficult to do both at the same time. Do you agree with me? Now let's take a look. So a lot of people says that you can catch the top. Really, look at all the incident that created the top. And all this incident, you mean you can forecast what is going to happen? I don't know who can. I only know one person who can. His name is God, but he don't trade. So I don't know how you're going to spot all the top no if you're not God. Correct? Okay. And there's another thing that you might want to consider. Now, catching the top is difficult. Damn difficult. We will never know when it's the top. Yeah, we will never know. Some people say oversold is the top. I don't really think so. Okay, if you look at the historical trend, high can go much higher one, you know. Okay, so catching the bottom, it's also very tough because you don't know when is the bottom. But profiting from the recovery is easier. So see, you may not be able to catch the absolute bottom. That means you may not be able to get this 582% return and the 228.81 return and the 295.19 return. Exactly this return, you may not be able to get it. But can you get part of it? Yeah, I think getting part of it is easier. Okay, what do I mean by that? So let me show you this interesting one. Now, this is the VIX volatility index, where it will measure fear, risk, stress level of the stock market. So I want you to take a look at this VIX index and the chart pattern. Now, of course, history is not a confirmation that future it will repeat again. However, that is my best bet, okay? Since 1986 until now, I saw a pattern and I want to show it I want to share with you. Yeah, I'm sure you already seen it. Now, VIX, when it is high, that means the market collapse or plummet, you know. When it is low, that means the market go up. So when it is low, that means the market is going up, right? Can you see, right? When VIX is low, that means the market is very bullish, okay? And the low of VIX, it's ranging between $10 to $15 range. So to me, VIX or fear factor, this is the bottom of the fear factor. That means there's no fear. Yeah, that means fear is very, very low at about $10 to $15 range. This level show that there isn't a lot of fear in the market. Okay. Now, there's a second level of a base. Okay, I call this the fear base, the low range base. The other level will be $20 to $25 range. So what happened is this, the market don't like fear one. If you watch my previous video, I talked about it before. The market don't like fear one. Yeah. So what happened is when the market is very scared, too scared, then they will want to come down, right? So when they want to, so every time whenever they go up, it will come back down. And they will come down to which range? Now here's one range, 20 to 25. So when you go up to about $80, $170, that kind is too much fear already, too scary, too stressed already. Okay. So then what will happen? It will come back down. Yeah. And when you come back down to what level, that means right, the fear or the stress level stabilize. So at this stabilized level is where the bull can charge because bear no longer have the strength. Correct? First base, $20 to $95. Second base, $10 to $15 range. So that when the fixed index is ranging during that price range, that means right, bull market is probably on a good run. Okay? So when is the best time to buy? When it spike. When it spike is the best time to buy. So when you buy here, as it drop, right, that means your return keep going up. Okay? Now, let's take a look at what is happening right now. I always like to use this pattern as my benchmark, because 2008 it's where it was at its high. You can see, right? So it spiked, boom, then it go down. Okay, when it spiked, I like RSI a lot. Now, if you don't understand what is RSI, just understand that RSI, when you see this indicator going up into the red zone, that means it is at the oversold level. Meaning, right, in other words, in this case, it's too much fear already. So when it is too much fear, like a rubber band, when it's stretched on it too much, what is going to happen? You're going to come back down. Okay, so over here, when price went up to about $89, is too much fear. So what happened? Market reject the fear because they don't like the fear. So what happened to it? It will come down. So when it come down, and after it came down, right, does it go back up often? Yes, it will, but it will not go back up to the very extreme range within a short period of time. Usually. Okay. So again, right now, what is going to happen? Because of the COVID-19, so market spike, right? No, market spike. The VIX index spike because there's a lot of fear. Boom, it was at the peak again. So now what is happening? It is coming back down. But does it come back down in a straight line within a short period of time? No, you see, it take about two to 3 years, right, to come back down. So it will take about 1 year over here. Okay, 1.5 years. So same thing. It probably will be taking 1.5 years. When it is coming down means what? That means the market is on a bull run for another 1.5 years. You get me, right? Okay. So right now, the market is already went up. I mean, the fear index already went up so high. Is it going to have another spike that is as high as this? Now, based on the history, it only happened one time before, okay? During 1997, 1998. So it happened. Therefore, is there a possibility that VIX will experience the similar kind of fear, right? Okay, within a short period of time. There is a possibility. Anything can happen in the market, correct or not? Okay. So, but let's take a look. Now, in 1997 to 1998, right, where the VIX experienced a double spike within a short period of time, I want you to take a look at the stock market, okay? 1997 to 1998. So this dip caused this spike. This dip caused this spike. Is there a double bottom? Now, when the VIX experience double spike, doesn't necessarily means the market will experience double bottom. Meaning, because of the COVID-19, the market plunged, right? So VIX spike, right? Now, VIX spike again. If let's say, even if it spike to the same level, does it mean that the price will go down to as low as the previous, as the COVID-19 low? May not be, no. Okay? And so far, based on history, that's the only thing I have. Based on history, it didn't happen. So normally, it spiked one time. That the biggest spike, probably it's where the market is more or less bottom. Usually that's not always the case, but usually that's the case. Okay. So now that means, right, if based on the historical pattern and based on the chart is correct, it means we probably won't see another bottom that is as deep as COVID-19. Depending on which country, like Singapore probably will experience, but US, I doubt it. Okay, based on the bull run, I doubt that it's going to happen. So to me, right, the presidential election, this dip, it's a good opportunity to get to add on position or start a new position. Okay, so is it a good time to buy Tesla? What is going to happen to Tesla? That's the main topic, right? Okay, fine. Let's talk about this. Now for Tesla, what would be the possible price behavior based on historical pattern of Tesla? Here there's a worrying sign. Okay, don't know whether is it worrying sign for you. Now you see, there's a pattern that I wanted to share with you. Okay, when Tesla started, right, it was $3. Wow, that was very low. If you buy $3, then now $300 over dollar, ooh, you'll be the happiest man on earth. Okay, anyway, but depend on how much share you bought. No matter what, still happy. Okay, you have good return. Okay, anyway, it's not what I want to say. Now, you see, Tesla price range bound for a while. After you range bound, what happened? Then there will be a spike. So can you see RSI? Boom! There will be a spike. This, some people call it parabolic. Possible, yeah, but no matter what, there's a spike. So your cost price to went up exponentially. So from $3 to about $3 to about $30 over dollar, right? 10x. And then after that, what happened? A lot of people were calling it to go down again, right? So far, based on history, it didn't go down, but it was range bound for a very long time. After you range bound for a very long time, boom, can you see another hit on the RSI, and then the price go up again. So now it has experienced a price spike. Some people call this parabolic again, right? So what is going to happen? That means, right, based on history, okay, I know you probably don't like to hear this, but based on history, if the fundamental, if everything remains the same, if the pattern were to repeat again, that means it's going to range bound for quite some time. It's going to range bound for quite some years, before we see another spike. So would it spike or would it come down? Now it depends on your belief on Tesla and Elon Musk, really, the management team, correct? So if you believe that Tesla is going to beat return, Tesla is going to definitely hit all the outlook and going to meet all the numbers, okay, going to beat the earnings again and again and again, and then next year is going to be even better, and the next few years is going to be even better. It's just going to keep growing stronger and stronger, grow from strength to strength. So if you're a long-term investor, long term, that means, right, if I will look back at this chart, so it might range bound. We never know, it could spike all the way until the moon, and then I'll be a happy person because I'm so much investor, right? Okay, so it might range bound for a while and then spike again. Okay, based on history. If let's say the fundamental of the company don't change and it's keep improving, okay, so that could be the possibility. So now, does it mean that there's no opportunity for Tesla now? For those who already bought, and if you don't mind the wait, and if you're long term, then stay invested. And if you believe it, only if you believe in the company, then probably good things will happen to you, correct? Okay. Now, for those who are not invested, let me share with you the possibility if you want to join the Tesla Club, correct? Okay, so I call this the Tesla Club Investment Center. Now, here's the thing. Can you see? This is RSI again. If you don't understand RSI, just understand that when the price come down, when RSI come down, when price come down, RSI will also come down, right? When it comes down, it hit the blue zone. You see blue zone, okay? So that means, right, it is oversold. That means the market feels that, okay, or based on this indicator, not the market, based on the indicator felt that it is sold down too much already. Okay, the price should rebound. Something like that, okay? So if you understand the layman term, see, when RSI hit this level, then there was a rebound. The rebound went from $38 to $43. Now it happened again towards the end of 2016. So it hit the blue zone and it rebound. Price went from $59 to $69, $10 upside. And then it happened again in 2017. Price came down and then rebound again, went from $48 to $61. So even though it's range bound, there's a good price entry point. Yeah, if you're able to catch somewhere at the lower band of the range. Okay, then it happened again, and then price went from $35 to $52. Okay, and now it happened again. Price went from $70 to $502. This is where I got in. Very happy. Yay. Okay? And then now, do you think it's happening again? Possibility. If it happened, and if history were to repeat itself again, probably you are not getting it at the high price lah. Okay. Provided again, and let me repeat, provided if you believe in the company, that you believe that the company is not going to go into shithole and after that come down all the way here. Yeah. So if it is going to range, then this could be the new range, right? And then if it's not going to spike, like if it's going to range, if it's going to spike, then even better. I'll be so happy. If it's going to be just a range, then if you buy when RSI is low, then probably you catch yourself at a good price again. There could be a potential upside. Yeah, even for short term also can, but I'm not into short term. Right? Okay, now let's come to the last topic of today. So far, so good. Please give me an early thumbs up and smash the like button to give me a motivation as a sponsor for this video, right? Sponsored by your like and your comment. Huh? Cool, right? Again, no need money, man. Now, is it safe to bet big on Ant's IPO, which is coming up on the 5th of November? So a lot of people thought IPO, I'm going to be damn rich, the price is going to spike a few 100,000 times. And then after that, Ant's IPO, Ant's Finance is a very good company, has got a good economical mod. So what's going to happen? Now, let's take a look. It's very hype up, no? In my opinion, this IPO is very hype up. Hype up is good or no good? Good for the company. Now, what do I mean by that? Okay, because they are looking to go public to raise fund. So of course, with the hype, so you have to understand marketing, you have to understand business, you have to understand financial PR. Okay, when they want to IPO, they will want to create hype, because without hype, people won't be excited. People won't be excited. People won't buy, So if no one buy, then how are they going to raise fund? So definitely they will always have a lot of hype, correct? Okay. Now, is hype good? Good. So it depends on whether you are in or you're not in. So is it a good thing to buy during IPO? Now let's take a look. Now I'm not saying it's no good lah. Okay, I'm not saying it's no good. Now let's take a look at Facebook. Now Facebook when they first IPO, wait. Facebook when they first IPO, okay, I want to take a look at the chart now. When they IPO, right, they went up $42 after it came back down to $17.55. So if you bought here, you will feel you probably feel like you're like an idiot or something, okay? Yeah, you feel sucky lah. Okay? Can you see within 1 week, okay, it went down so much. Oh my god, okay, it went down a lot more. So of course, see, eventually it went back up, right? So you say, oh, it's okay to buy now, man. And after that, okay to buy now, and after that, eventually it went up. Now, not all IPO stock went up back to like break new high and break new high and break new high and give you a lot of return, But of course, and based on the fundamental, based on the story, based on the company, high chance now, okay? So when is it good time to buy? Now, if you don't mind buying now, with the chance that you are buying at the short term to mid term high, then you can go ahead lah. Okay, with the hope that it will go back up to very, very high. Yeah. If not, then based on history, there's a chance that after IPO it will come back down. Now, I'm not just looking at Facebook. I'm looking at a few other companies as well. Lemonade don't look at somewhere too long ago. I must look at recent, because recently sentiment may change, right? People may be too hype about IPO, and after IPO, become a very good opportunity for you to make a lot of money. Now, so Lemonade, debut, the IPO debut, gained more than 140%. And look at the revenue from 2017, it's 2.4 million, 2018, 2.5 million, 2019, 67.3 million. Wow, this is a good company, right? Okay, can buy, right? So after that, can you see when the IPO, this is the high already, have now where is it? $50.29. Okay, and it has dropped to the bottom of $44.11, almost dropped 50%. Okay, this is a recent one, right? So would you prefer to buy here, or would you prefer to buy somewhere around here? If you really believe in the company, correct? Okay, so IPO, the initial phase, right, stage may not be a good entry point, or may not be, all right? Okay, now let's take a look at the recent one, another one, Snowflake. Wow, remember the hype? Let's take a look at the price. So the revenue, can you see, from 44 million to 148 million? No, so it's a good company, right? Can buy or not? Now let's take a look at the IPO price. IPO price, so open, shoot up $319. If you buy here, I'm very okay lah. You didn't lose much lah. Now it's 250. Okay, but can you see? You are not you're buying at a very high now. Okay, so you may want to wait a bit and wait for it to dip. Yeah, there's a chance. Is there a chance that it will never dip? Anything can happen. I won't know. I'm just based on history to share with you, right? What's my take on it? So my take will be IPO. When they first IPO, right? Normally you are buying at a high, okay, based on all these historical patterns lah, okay. But of course I did not pull out all the chart to take a look lah, huh? But I think it will be fair, right, to take a look at the parent, Alibaba, right? Okay, so see Alibaba, when it first started, right? Okay, when it first started, okay, when it first IPO, it went up, right? Then after that, what happened? Boom, it came back down. Now, very interesting, no? Usually, right, for companies, or for the people who owns the share, right, during IPO, there's one clause. This clause will say that within the first 3 months to the next 6 months, right, okay, of IPO, you cannot sell the share first. You cannot liquidate. You have to wait for a while. Which is the reason why, right? Can you see Alibaba, right? Within 3 months, can you see a lot of people are dumping their shares? Why? Because they want to make money from from back, get their money back from investment, or take advantage of the IPO to get some cash. Suddenly become they want to make money, lah, correct? Okay, so because of that, there will be a dip. And if ants have the same kind of a clause, I don't know, huh? I don't know much. I did not do a lot of research. I'm just sharing with you based on my understanding of IPO, lah. Okay, so that means, right, if let's say it's going to be the same, there's a high chance that the same pattern will happen. That means, right, within the first 3 months, then the price will continue to go down, lah. Okay, so if that is the case, you may want to buy only when the price starts to go down. But if you are so of course there's a few scenarios. One will be you buy now, lah, okay, because you close your eyes for 5-10 years later, then probably you will go up a lot, right? That will be one scenario. Two, you wait for it to dip. Don't dip, don't buy. Dip, then buy. At least you know you dip, then you have bought at a discount at a time, lah, okay. So or don't touch it at all, if you know nothing about the business. Now I don't believe in the business, don't touch it at all, lah. Okay, so that's all I have for you today. And will you be buying the dip? Share with me on your comment, and remember to subscribe if you like my video, so that when I come up with the next video, you will not miss what I have to share with you on my opinion and thoughts on how to invest and grow your money, so that we can all become independent and don't need to work for people anymore. Thank you and have a nice week ahead.